When you are learning how to trade in these markets and you start looking for courses, books, or whatever, there is something interesting because you are going to find a lot of information, but all the examples are successful. You are learning the Elliott wave theory, so you buy a book and they are going to show you pictures of the wave 1 and the wave 2, and how you buy the wave 2 and you make a lot of money during the wave 3. And they can show you 10 examples, and all the examples on a book or in a course are going to be successful. That's quite interesting, right? Usually, when we are learning how to trade, we don't see the examples that don't work and how we can act to avoid losing money when things are not working as expected. Traders, and that's our reality, right? We are always looking for examples that work. But when we are trading in real life, there are going to be cases where the scenario doesn't work as we are expecting, and that's when things start being complex. So you need to train yourself to act when things are not working as expected. That's extremely important. So that's something that we cover every day in the membership. We have a trading room, a live trading room every day in the memberships in Elliott Wave Street, where we talk about these type of topics because are extremely important. I believe that real money is not only when the trade works, it's also how you act when the trade fails. And I'm going to show you a great example of this case. We were expecting, traders, this week in the membership to see the completion of this leg down and the price to start climbing. I was thinking that this was the end of the move. It looks like a pretty good accumulation process. But still, the price moves a little bit higher and then sell-offs heavily, especially today, and keeps moving down. So since here, I was expecting the price to reverse and start going up, but actually the price continued lower. And that's something that is going to happen eventually, and it's going to happen even if you are a professional, even if you are learning, whatever, right? Always, sometimes it's going to happen. Of course, not all the time, but sometimes it's going to happen that you face these type of situations. But the real question is how you act when things are not working as expected, right? That's the key point. And I'm going to give you some hints and some tips to avoid losing money even when your trade doesn't move or the price doesn't move in the direction that you were expecting. Because if you master these principles, you are going to make some good money. Imagine not losing money when things don't work and making money when things work. Well, that's possible. And at the end, your equity curve in your account is going to be something like this. This is our reality. Whoop, 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 right? But usually the trader is the other side, right? The losses are huge, so the equity curve, the trader starts with a $10,000 account, and at the end, is losing so much money that 2 weeks later has $500 in the account, right? That's the average trader result. But with simple rules, you can avoid losing that type of money, and when things don't work, to have your account steady, and when things work, let it run and let it run. This example, traders, now let's move into our trading chart. Let's move here first, and then we will check the S&P. But here on the 30-minute chart, let me show you the trades that we were looking for. So the first trade was here during this market cycle, and this one came down to the stop loss. We leave the stop loss. The high of the box is the entry point. Sometimes we can have a better entry, and the low plus 1 pip of the box is the stop loss, right? So here we have the first one. Here we have the second one. Is a break even. We define a winner trade when it reaches at least a 1-to-1. So at the 1-to-1, we book partial profits. We reduce the trading size in 50%. So it's already a safe trade. So no loss here. Here we have another one. We can have a strike. I call it the strike when it hits the stop loss. Here we have another one. This one makes 1 to 2 risk reward, so enough to book some profits a little to recover from these strikes, or at least to have a break even. Here we have another 1 to 2. Here we have another strike, another 1 to 2. So when you add all these trades, yeah, of course, it's not the best week in the world, but at least you are not losing big money. You are losing little money when this happens. And you are going to face this type of price action even if you have years of experience. Of course, when you are learning how to trade, most of the times they are going to show you your instructor or your book or the course you're taking, whatever. Most of the times they only show us the examples that work, because they feel bad when a trade fails. And I think that's a mistake when you are training a new trader, because it's important to teach the trader how to act when things are not working as expected. Probably that's the most important skill that you need to develop, not losing money when the price is going against you. That's an important skill to develop. So that's the process. Today we have a really big sell-off in the euro after the news, after the ECB, and we continue with the bullish bias. So in general terms, what we are doing here, we're looking for the completion of that leg, and the plan is to come back here to the highs, to the 112.17, and it's a matter of patience. Now let's have a look, traders, at another interesting instrument this week is the dollar yen. The dollar yen also has been building this process of the distribution. One of the key hints of the distribution is that we start seeing this type of price action. So here we can sell it, here we can sell it. Execution is important. Right, let's talk about that. If you want to sell or if you want to buy, it doesn't matter, and the price is coming up here, and let's say that you want to sell, but you need to find 10,000 validations, the moving average crossover, the breakdown of the support, and now you can trade it, and you leave the protective stop loss here, and all these distances your risk, you are not going to make it. So one of the first steps that you need to fix quickly when you are trading is the art of triggering at a good price. Because I'm seeing that sometimes the trader comes with really bad habits and he triggers here instead of here. Here is his risk. And when we are already in a 1-to-5 risk-reward ratio trade, the trader is just entering the trade. That, of course, is a huge mistake. And this could be a 5-minute chart, or this could be a hourly chart, or whatever time frame that you like to trade. So executing the trade at the highs, here, and here comes the next one, is extremely important. We are calling this trade the 1,000 pip trade, because at least the plan is to get back into this area, to the 140, and we are trading at the 150. Of course, this is a fantastic opportunity, because the main plan is to continue down, or to start moving down. So far, we're just in this accumulation. And if we are right, we make good money. If we are not right, we lose a little. That's it. Sometimes the trader feels bad because the price hits the stop. It's part of the process. Feel bad if you are losing a lot of money. That's when you need to feel bad. But when you are doing things in the right way, in the right manner, properly managing the risk, so you need to become an expert on how to act when things are not working as you are expecting. That's the real thing in trading. Because if everything is working, imagine that scenario, well, fine, easy. But that's not the skill that you are going to reach. You are always going to have good trades and bad trades. That's a reality. That's it. So that's how trading works. And the difference is that you don't lose money when you are not seeing the results that you want, and you are making money when you have good results. That's it. Let's have a look at a beautiful trade that we are following today in the S&P. So on the S&P, in the ES futures, we are looking for a continuation. And let me show you the trade here because it's really interesting. It's on the 5-minute chart. All these examples, we follow these examples in our Discord channel. I update the clients with the charts, and also we have a live room every morning where we check the live markets, we plan the trade of the day based on Elliott Wave, based on liquidity, which is extremely important as well. So there is not only one thing that you need to check. You need to check different factors. So look, this is something real. We got this trade today, and 1-to-1. Remember that our 1-to-1 trade is a safe trade. We knew that the price was going up because we also have this indicator that tells us the liquidity from the big guy. And then we use price action and some tape reading, that is a price action with volume, to confirm the entry points. So here, traders, we have the first entry point is a safe trade, and then we got the second entry point, 1 and 2. On the second one, we are still active. We're looking today for a fresh high on the S&P, so we already have a safe trade. We already booked some profits. We are in a good place, so we are not going to lose any money. This is a risk-free trade already because you already reached the 1-to-1. And if it moves back to the high, fantastic, right? And if it starts selling, we can consider closing the trade, so we can book some profits just in half of the trade. Right? That's a possibility that we can consider in case that starts selling. However, the probability is to the upside because the liquidity indicator is telling that we are going in the direction, because the price action is still bullish, and everything is telling that the direction is to the upside. So we're going to continue with that path. We're going to continue working in that direction. Then when we reach the previous high, we will book profits. Traders, this is a fantastic approach for finding the end of the waves. If you like Elliott Wave and you like liquidity and you like the volume profile, you're going to learn with us also the volume profile. It's extremely important to read the levels and to read where we need to act, right? Look how price is having trouble to cross this low liquidity area. So that's the process. And at the end, each day you're going to learn something new and you're going to improve your strategy. But everything, understanding how to act when things are not working as expected. That's the real thing. If you don't lose money when you are wrong, or if you just lose a little of money when you are wrong, and you make good money when you are right, that's when you're going to start seeing big results in your trading. So that's the plan. Now let me show you, if you want to join our group, we have a fantastic a community on ElliottWaveStreet.com. Then go to the membership, and on the membership you can pick your plan. Here you have the Premier, the Elite, or the Mastermind access. Just pick the one you prefer, and you will get access, for example, here in the Elite, to the live session every morning, and the day trading plans, and the swing trading plans, and the Trading Academy. We have a lot of courses to improve your wave counts, to improve your strategies, and of course access to the Discord community. Also, here you will find a special offer that we have with AvaTrade Broker, where you can get access to the Mastermind membership for free. So here you have the details, and if you have any questions, on top of the page, here is our WhatsApp phone number or our email, and we will answer any questions. Traders, that's the plan. Please have a fantastic rest of your day. I'll see you soon. Take care. Bye-bye.